Hey everybody, good afternoon. This is Doc Severson with 12-Minute Trading. Today is Monday, the 15th of September, and we are 2 days away from the Fed meeting. Now, the market has already priced in the Fed cutting 25 basis points, and there's been some speculation about maybe he's going to cut 50 basis points and what would happen to the market if that happened. I don't think that's going to happen. That's not really Powell's style. He has cut 50 basis points in the past, but that was well telegraphed. So the Powell administration has certainly a way of kind of leaking out information and making the actual Fed meeting and the resulting market reaction almost a non-event. And that's quite a bit different than the way it used to be with Alan Greenspan, Ben Bernanke, or even to some extent, Janet Yellen. So Powell's been pretty good about being very, very open about things, especially with the press conferences that he has. So everything's on the table, and it's not so much of a surprise. But let's take a look at what's happening with the market here. Okay, so let's go look at the S&P. So we're going to bring this up over here. And here's the S&P on the monthly, the weekly, and the daily chart. And of course, we've had our, I've got to get my pen in place here. There we go. This is my way of speaking with my hands, right? So looking at the trends, we have a strong trend on the monthly chart. Now, this is actually technically an exhaustion, but I think we may have one more swing in the tank before things start to get ugly. You can see what's happened when we got to these ridiculous points where the trend just won't end down here. We still had several months of coasting to the upside before the trend eventually gave way to a bear market. And then the same thing happened here into late 2024. In both cases, we got really noisy. We got a transition into what I call sideways and volatile before the market yielded to negative pressure to the downside. So not only are we not to that level yet, we haven't even seen the market change character, and that's very important. Now, what's happening here is the weekly chart. We talked about this. The weekly chart has a great deal of energy in it, which means that there's a lot of potential to trend. And so, of course, what we do, and this is going back 2-3 weeks ago, we said, hey, it can go either way. This energy can go to the upside or it can go to the downside. However, the trend, when in doubt, usually going in the direction of the trend works. Excuse me. So we still have quite a bit of potential left for this trend to go on. Now, the daily chart is in exhaustion right now, and we've seen this thing pop to the upside out of this. So we've seen over the last 4 days a pretty good break above the breakout level, which is just above 6,500 on the cash index. So 6,500, we've gone maybe 120 points or so. It's getting close to exhaustion here. And it may be time in the next day or two, starting to see a little bit of a shooting star here. So the next day or two would make sense to see that. Now, I think a lot of people are just assuming that once the Fed cuts 25 basis points, the market's going to take off. Guess what? It's already done that. It's already priced in the move. So this move that we've gotten from 63.50 up to 6,600, that's 250 points. That's not insignificant. It's already priced it in. So I think what we might see into the end of the week is something like this, where the price just kind of consolidates sideways, or maybe even pulls back. Remember, the market loves to create pain across the board. Market loves to do that, right? So if you ask yourself, what way would the market have to move to create the greatest amount of pain? That's what it will do. So if a lot of people are expecting this to go higher from here, it may actually go to the downside and retest this breakout. And then we should pivot off of there. We should pivot off of there. If we don't, that will be what's called a throw over. It's almost like a clothesline where you throw something over it and it ends up trapping a lot of bulls. So am I bearish? Is that why I'm bringing that up? No, I'm not. But you always have to look at both sides of the market and say, okay, if it goes higher, what will I do? If it goes lower, what will I do? Which way is likely, which way is the trend going right now? It's clearly to the upside. And if we start to see reversals on the smaller time frames, those could eventually propagate up to larger time frames. Right now, this is an epic move. We've only gotten a 3.3% pullback along the way since April, which is really, really shallow. So this is one of the strongest, most persistent rallies that we have ever seen. And it's because of what's going on with the, Dave went into this at length in the last couple of weeks and what's happening. And I think the reason why Powell has no choice but to cut, even though inflation has still been relatively sticky, as we saw with CPI last week. Okay? So that's what I'm seeing, guys. Let me know if you have any questions. I'll look at a couple of stocks here. We're going to keep it short, probably be out of here quarter till. Quarter till is probably when I'm going to be pulling the rug. Let's go through the Mag 7 and see where the leaders are. So right now, Apple's certainly still one of the leaders. It's consolidating, but it's got to break above 240 to keep that trend going. Otherwise, this could create a weekly lower high and a bull trap. So watch out for Apple. Apple is a little bit tenuous right now. Amazon has been very strong once again, and it's almost building a cup with handle pattern. So you can see, I mean, it's not a very rounded base, but certainly the consolidation right at the neckline here is a very common pattern. A break above 240 on good volume would be very strong. We have Meta. Meta's doing well. No issues there. Google, another super strong day. Oh yeah, we'll get to gold in a minute. So Google has gone from an okay chart. Actually, it was doing really poorly back in March with a lower low, and it is almost doubled since then, which is amazing, right? So Google has found the magic sauce and is doing great. Let's look at NVIDIA. NVIDIA is actually, technically, this is one of the best charts because this is a common bull flag. Looks really good. Consolidating now, ton of energy on the weekly chart. Has got enough energy on the monthly chart to support the next trend. And we don't really care about what the daily chart is doing. So NVIDIA looks really good, and we're quite a ways away from earnings. 1 penny dividend, that's awesome. Did we look at Tesla? No, we didn't. And Tesla's way up today, but it's given back a lot of it. It's given back a lot of it. So when you see moves like this that exhaust that daily chart and also technically into exhaustion on the weekly chart, you never chase after these. Never chase after these. Always wait for the price to either come back down or try to get the breakout. First of all, if you can get the breakout, great. But a lot of breakouts are happening after hours. But never chase after these things. Okay, so let's look at precious metals. GLD. So what's happening with GLD? Well, technically, we were in super exhaustion last week, but it has done just enough shake and bake here to reset this. Now, the weekly chart doesn't look great, But, guys, there's times where I would say technical analysis can work for you as a structure about 95% of the time. There's going to be 5% of the time that supply and demand and people being on the wrong side of the price has no bearing on the TA read. So it's just animal spirits and or people being on the wrong side of the trade. This is the classic ascending triangle. I mean, this is right out of a textbook. And the measured move target for this is the open end of the triangle. So if we append to that, if we say that this is maybe 290, we're looking for maybe 350 on this one to satisfy this. But we are running out of gas. So again, try to get in early on these things. Let's look at silver, SLV. Silver also looking good, although running out of gas, running out of weekly energy. This is typically the spot where things start to slow down. On the bigger picture, this is also creating this big rounded pattern here, and this more than likely will turn into a cup with handle. More than likely turn into a cup with handle. Actually, GLD was one of the best cup with handles that I've ever seen. Look at this. Great, big, rounded base cup. Look at this. I mean, we're talking about 2011 when this thing started. And there's a pattern within a pattern here too, because if you look at this, this is an inverted head with shoulders pattern, which form the handle of the cup. So big believer in chart patterns because chart patterns show a visual representation of crowd behavior in the price. Does it work 100% of the time? No, they don't work if too many people see the same thing. But I can tell you that nobody's really paying any attention to the cup with handle. Everybody was bearish down here, and that didn't work out too well. Okay. Any other questions for today? So again, this market right now. Markets are different. I'd say every year, what separates the professionals from the retail traders is the professionals will study where the edge is. What's the edge for this market? And the edge is actually pretty simple in this market. Hold assets long. Don't get too crazy with selling covered calls and cap your gains and stuff like that. I always run into trouble with those. So make sure you understand where your risk is on any position, and don't assume that this is going to go forever. When markets rip like this and get into monthly exhaustion, one of the things I always hear down the road when markets turn over, and they haven't turned over yet, but one of the things I always hear is, oh, shoot, I wish I'd taken profits. So another thing, too, is, I mean, we may be getting close to some of the upside targets, like for Bitcoin. This is IBIT. This is the IBIT. And I'm going to look at BTC. So Bitcoin, I'm going to just look at Bitcoin here. And my next target for Bitcoin is about 145,000. About 145,000. So we actually did hit the measured move target of this big cup with handle pattern, and that showed that it was about 122. So right up here at 122, I took profits on the first tranche of the position, on the very first tranche of the position. That was back in July. So I've been waiting literally 2 years for that measured move target. So again, taking profits into strength. Will you leave some on the table? Absolutely, you'll leave some on the table. So the whole idea here is to split the position into thirds and do measured move targets for the first 2 thirds. And then the last one, the last third of a tranche, you try to hold on to that one as long as you possibly can with a trailing stop. Because a lot of the gains in a market move will occur at the very, very end, right when all the euphoria hits. Okay, anything else? Anybody else out there? I wanted to keep this one short and sweet. Again, not much that we can do in front of Wednesday. So Wednesday, we're going to have a reaction. A lot of times Thursday, we'll have an opposite reaction to that, which is the real reaction. So if Wednesday ends up being a sell the news event, we may have a bullish move on Thursday, or the opposite. Do I think BTC would go to 50 weekly? 50 weekly. I'm not sure what that means. Do I think that Bitcoin would go to 50 weekly? Oh, the 50 weekly SMA. Okay, so this is actually the 50 weekly SMA right here. This red line. Let me make sure of that. Yeah, that's got to be the 50 weekly, which is essentially the same thing as the 200 daily. It's pretty much the same thing. So that would be if this created a weekly lower high and then we rolled over again. So the odds of that, I mean, that could happen. If we look at volume profile, right now the major point of control is just above 100,000. So if we rolled over to that point of control at about 104, 105, where would that be on? That would be just about there. So, but something would have to happen. Something negative would have to happen for that to occur. Right now, we have very good linearity of the market. So I am still expecting this to break higher from this consolidation. But if all of a sudden we start to see something like this happen, then you could be correct. We could be starting to move into this. So this is where I set up the Darvas box and understand which way the price is going. All right, guys. Okay, nothing else seen. Thanks, everybody, for checking out, and especially for those of you watching this on a replay. Again, we're not here to predict the future. We're just analyzing what the market is giving us right now and trying not to interject our own bias into it, which is tough. It's always tough to do. So we're just trying to look at this and say, what is the market trying to tell us right now? And right now, it's hard to ignore the trend. The trend is very strong still. Apart from the fundamental fact of I think the Federal Reserve as well as the U.S. Treasury has no choice but to chase after this thing. All right, guys, thank you very much. We'll see you guys next Monday. Same bat channel, same bat time. Thanks, everybody. Take care.